everyone to today's Q&A session where we'll be going through gold and silver in a little bit more detail and answering all of the questions that you sent in as well. The first question is from Humph, and that's really drilling down into what you need to be aware of when you're tracking gold and silver prices. So first of all, one point that a lot of traders would do very well to keep on the radar when they're trading gold and silver is the gold to silver ratio. That ratio has broken down from 20-year highs, which hit 93 to 1 over the course of the last quarter, and has now broken down to 86 to 1. So we're seeing right now the gold to silver ratio trading at 3-month lows. And typically that will indicate that for the short term, silver is going to outperform gold. And in fact, behind me, you can see in the chart right now where silver has already broken back above last week's swing highs. We're trading at 1-year highs, exactly as we mentioned last week. We were anticipating silver and gold to break back above their swing highs, break out to the highest levels in certainly over a year, with silver and with gold breaking out to 6-year highs, and silver is very much on track now for a potential tap of that magnetic level at $18. So you can see very clearly right now silver is leading gold, and this has been the case over the last week or two, where you want to watch out, certainly on the lower time frames, to see where silver starts to break out, especially if gold hasn't started to move. If gold is consolidating and silver breaks out to the upside, expect gold to then follow suit shortly afterwards. So silver right now is leading, currently trading around $17.70 to $17.75, and we're looking for a bit more upside here and tapping that key magnetic level on silver of $18 per ounce. The next question comes from Dinesh, and that's with respect to what you really need to consider at the moment, week to week, on the gold and silver market. One point we've mentioned several times is, of course, seasonality. You really want to be on top of what the seasonal plays are throughout each month. So typically over the month of August, gold and silver do perform very well. As we mentioned before, you tend to see January, February and August gold and silver outperform versus other months of the year. We've also mentioned this several times as well, that hedge funds and money managers, they have increased yet again their overall net long positions in the latest week. And you also want to be very aware of key levels which offer great opportunities to buy in. So it's often when a lot of traders, especially from a technical point of view, are looking to, for example, sell into a market that we've seen recently, on each time gold and silver look a little bit vulnerable to a correction, many technical traders, they're looking for a breakdown of a trend channel, a break of support, and time again, they are selling into a move just as we're seeing all the buyers come in. So you really want to be careful of essentially just using only technical analysis when you trade. This is why it's very important to have a research-driven approach to the markets, where you're not only looking at technical analysis, but you have an edge as well, where you are marrying that up with geopolitical news, fundamentals. You're also looking at hedge fund positioning versus the retail traders. You're using intelligence. At the Gold and Silver Club, of course, we use in-house proprietary intelligence to give us a lot more data on the markets. And of course, you marry that up with key technical levels, and then you want to look at that also from a seasonal point of view and marry that up with what retail traders are doing versus the big players in the market, and that will give you an edge. The final question today comes from Hassov, and this is more of a risk management question in the market. So what I would suggest, Hassov, where you've mentioned that several times possibly you're getting on the wrong side of these positions, again, it's very important you're doing your due diligence in the market. Make sure you're doing your research day in, day out, and also make sure you're very aware of the narratives in the market when there are going to be major news items, when you are expecting potential for explosive moves in the market, and also you want to have that patience as well. So typically a normal cycle in the market during Monday to Friday would be, typically on a Monday, you tend to see a lot of inexperienced retail traders. They're getting into a lot of positions, especially right on the open, and often this is not the right move. You want to be patient, you want to wait for the price to come to you. Once it starts to hit key levels that you're looking at buying evidence coming in at, then you can execute trades at a much better risk reward. You also are then able to have a much more clear and concise entry on your positions, take profit, and also align your stop loss properly as well. What you don't want to do is just after a weekend get into a bunch of trades on a Monday which possibly you don't have your edge on. Often Monday is counterflow to the markets. Then you're in a position where you're having to manage several drawdowns over the course of the week, and then it just doesn't provide an optimal trading routine for you. So typically during the course of a week, you really want to be patient, wait for the price to come to you. Don't jump into trades where you don't have your edge in the market. Be patient, but when the price does come to levels that you've been looking at for an optimal risk reward, you marry that up with all of your research then you are trading with edge, and that's much better than just taking a knee-jerk reaction to the markets and just getting in based on hunches because you're impatient in the markets. So I hope that helps, Hassoff. Thanks again for all of your questions today, and we'll see you back here next week for gold and silver.